All right, let's get right into it. Today, we're putting AUR stock on the examination table for a full technical checkup. We're going to see if its recent performance is a sign of something serious or if it's just taking a much-needed breather. So that's the big question, right? Is this stock fundamentally unwell, or is it just consolidating before making its next move? We're going to dive into the data, check all the vitals, and see if we can come up with a clear diagnosis. First things first. Like any good doctor, we have to start with the big picture. Before we get into the day-to-day symptoms, we need to understand the patient's long-term health. This gives us the context for everything else we're about to see. And wow, right out of the gate, we see a pretty big warning sign. The stock's current price is sitting at $4.46, but its long-term health baseline, that's the 200-day average, is way up at $5.88. That is a huge gap, and it's our first major clue that something's not quite right here. Because the price is trading so far below that key long-term average, we can officially diagnose AUR as being in a bear market. Now, this isn't just a bad day or a rough week. It means there's a stubborn downward trend, and it's usually fueled by a lot of negative feelings from investors. And if you need more proof of just how weak this stock is, look at this number. It's trading in the bottom 12% of its entire price range for the past year. This just confirms what we're seeing. This is what you'd call a beaten-down stock, and it is really scraping the bottom of the barrel for the year. Okay, so we've established the overall health is pretty poor. Now let's zoom in a bit. It's time to check the vitals. Think of this as the stock's pulse and blood pressure. We're looking at what's happening right now with its price and volume. And yeah, the immediate symptoms, they're not looking great either. In its most recent trading session alone, the stock dropped another 2.41%. So this tells us that the downward pressure isn't some old news, it is happening as we speak. This chart really gives us a powerful picture of the problem. We're looking at an indicator that basically measures selling pressure. And a deeply negative number like this, over 1 million in the red, tells us one thing, loud and clear. Sellers are in complete control. It's not a fair fight at all. It's dominated by what traders call distribution, which is just a fancy word for heavy selling. So the problem isn't just that people are selling, it's that buyers are basically nowhere to be found. The data shows very little excitement on the buy side to step in and prop up the price. It's a classic case of supply just totally overwhelming demand. Now it's time to go a little deeper, beyond just the obvious symptoms. Let's get the x-rays out. We're going to look at some of the internal indicators to see if there are any hidden signals that you wouldn't spot just by looking at the price. And this is where things get a little more interesting. Our scan is showing a really mixed bag. The RSI, which measures momentum, is just kind of neutral. But the stock RSI, which is a bit more sensitive, is really high. That suggests the stock might be getting tired in the very short term. And then you've got the MACD. It's still negative, but it's showing the tiniest little hint of a potential positive turn. So you see what I mean? We've got totally conflicting signals. On one hand, that high stock RSI is a big warning sign that any rally could fizzle out fast. But on the other hand, that MACD is whispering that maybe, just maybe, the underlying momentum is about to shift for the better. It's like a tug of war is happening right under the surface. And this just adds another wrinkle. A statistical analysis of its own recent downward trend says the price should be somewhere around $3.92. But it's actually trading at $4.46. That means it's almost 14% higher than predicted. So even within its own slump, it might be a little overextended right now. So, what does all this mean for the future? Well, it's time to turn our diagnosis into a clear prognosis. We need to identify the key battlegrounds, the exact price levels that are going to tell us who's winning this fight, the bulls or the bears. Here are the numbers you're going to want to watch. Think of 459 as the ceiling. The stock has to punch through that to show any real strength. Then, 439 is the floor. If it falls through that, things could get a lot worse. And that number in the middle, the pivot point at 452, that's the daily line in the sand. And because the stock closed its last session below that critical pivot point, the immediate forecast is leaning negative. This suggests it's probably going to open flat or maybe even keep sliding instead of staging some big comeback right away. So this all boils down to two very clear paths forward. The bullish story only starts if the stock can get up and decisively break that $460 resistance. The bearish story continues if it can't hold the line at the 439 floor. The future of this stock really comes down to which one of these levels breaks first.
All right, we've gone through the long-term health, we've checked the vitals, and we've analyzed the x-rays. Now it's time to put it all together for our final diagnosis and wrap up the key findings from this whole checkup.
The final verdict, based on all the data, is bearish to neutral. The big picture trend is without a doubt negative, but those mixed signals we saw in the short term suggest the stock might be hitting the brakes and entering a period of indecision. So it's sick, but it's not exactly in free fall at this very moment. So let's put this all on one final patient chart. Number 1, the long-term health is not good. It's in a confirmed bear market. Number 2, there's a lot of selling pressure and not many buyers, which is a huge hurdle for any recovery. And number 3, the internal signals are all over the place, pointing to a short-term stalemate or at least a pause in the decline. And that really leaves us with the ultimate question. You've got this clear long-term downtrend, but it's clashing with these signs of a short-term fight. So as you look at all this, is this just a stock catching its breath before the next plunge? Or could this be the very, very early signs of it trying to find a bottom? That's really the tension at the heart of this whole technical checkup.